OXY Petroleum, rooted in innovation and operational excellence, our fuel for tomorrow. Greetings, everyone. My name is Jessica Dawson, and I will deliver the recommendations for our company, Team Two's Occidental Petroleum. And what I've gathered so far is that if OXY Petroleum continues to accelerate its investments in carbon capture, utilization, and storage technologies, all while optimizing its F-core oil and gas operations, the company will be well positioned to lead the energy sector in a transition toward low carbon solutions, secure long-term shareholder value, and enhance its global sustainability footprint for at least over the next 5 years. But first, let's tune into the history of the company and its background with the financial stability and the business strategies for the company, with hopes that those will be able to take us forward and this company will become a success.
Hi, I'm Deshonda Davis, and today I'm excited to walk you through the fascinating history and evolution of one of energy's industry's most influential companies, Occidental Petroleum, better known by its ticker symbol, Oxy. Founded in 1920, Occidental started out as a modest oil and gas exploration company based in California. Fast forward more than 100 years, and it has transformed into a global energy powerhouse. Occidental is headquartered in none other than Houston, Texas, with operations spanning across the U.S., Latin America, the Middle East, and Africa. Oxy plays a major role in shaping the world's energy landscape. What sets Occidental apart is its diversified portfolio. While it's widely recognized for oil and gas and natural production, it also owns OxyChem, a leading chemical manufacturer in the US. This division supplies essential products used in everything from construction materials to clean water systems. That combination of energy and industrial chemicals gives Oxy a broad, resilient footprint in the global economy. In 2019, Occidental made a bold move that shifted its future. It acquired Anadarko Petroleum in a high profile deal worth over $50 billion. This acquisition expanded Oxy's influence, which is now known as one of the richest oil regions in the world, and solidified its status as key player in the U.S. production. But here's where Oxy really gets interesting. It's not just about oil anymore. As the energy sector faces growing pressure to address climate change, Occidental has stepped up a clear strategy for the future through its low carbon subsidiary, 1.5. Oxy is investing in a cutting edge direct capture, which is also known as DAC technology, a method designed to remove carbon dioxide directly from the atmosphere. These efforts put Occidental at the forefront of carbon management and environmental innovation with the energy industry. So, whether you're interested in traditional energy markets, industrial innovation, or the future of clean technology, Oxy Petroleum is a company that bridges the gap between where energy has been and where it is going.
Hello, my name is Prasanna Virkar, and today I'll walk through with the one of the influential energy company called Occidental Petroleum, which is called OXY. So it stands for at a pivotal moment in its evolution. Historically rooted in a traditional oil and gas exploration, the company has built a stronghold in the Permian Basin and maintains one of the largest CO2 pipeline networks in the world. Its acquisition of Anadarko Petroleum expanded its footprint but also introduced a significant debt load that continues to shape its financial strategy. Oxy's current game plan reflects a balancing act between operational excellence and forward looking innovation. The company is leveraging its deep expertise in enhanced oil recovery and carbon infrastructure to position itself a leader in carbon capture and low carbon technologies. This strategic objective align with its stated ambition to become the first net zero energy company, not by abandoning fossil fuel but also by transferring how they are produced and offset. Strategy objective includes scaling direct air capture facilities, optimizing drilling operation through AI and automation, and expanding partnership that monetize carbon credits and utilization. I'm also going to walk through with the research and development, whatever strategy they are doing. So, Occidental Petroleum research and development strategy is increasingly shaped by its ambition to lead the energy transition while maintaining the operational excellence. Based on the hypothesis that Oxy can secure long-term shareholder value and sustainability leadership by accelerating investment in carbon capture and optimizing core operations. Its R&D efforts that reflects a dual focus: low carbon innovation and enhanced oil recovery efficiency. There are two more R&D areas Oxy will be working. Focus on direct air capture, that is DAC, and carbon capture. Utilization and storage. Oxy is heavily interested in these technologies to remove the carbon dioxide from atmosphere and industry sources. Oxy has set ambitious goals to achieve net zero greenhouse gas (CHG) emissions. Promise operations before 2040 and across its total carbon inventory by 2050. Thank you.
Good afternoon. My name is Marvin Pierce, and I will be giving you the financial analysis for Occidental Petroleum. As we begin, Oxy's FY 2024 results paint a picture of a major striking balance between growth and discipline. After edging revenue up in the low single digits on higher realized prices, the company converted sales into a 60% plus gross margin and a $3.1 billion net profit. EPS $2.47. Operating efficiencies and tight selling, general and administrative expenses. Control offset commodities driven swings, leaving Oxy with a healthy 19% operating margin, even as it absorbed rising fuel, logistics, and carbon capture cost. On the balance sheet, Oxy leaned into a debt to fund its next generational projects against peers. Occidental trades at a reasonable mid-teen. Its ROE 9.5% and ROIC is 6.4%, trail integrated oil averages, offering an attractive risk return profile for investors willing to ride the energy cycle. Now, as we talk about investors, as it stands right now, Occidental Petroleum is currently trading at $46.26 as a close of the markets But I'll give you a little intel based on market stock sentiment. OXY has gained 2.4% over the past month, slightly lagging the broader energy sector at 4% and the S&P at 500, 4% also. The consensus right now, if you are a stock investor, is to hold. The 12-month price target average is $47.55, indicating a modest upside of 3%. So if we look at like recent target updates, we look at updated targets such as $45 in sector performance, while TD Cowen lowered targets to $45 and $58, shifting to neutral. And this is basically a competitive intake based on other competitors in the markets. So as we move forward, though, we'll look at operating performance and earnings. So in the first quarter of 2025, earnings EPS was 87 cents, beating expectations of 74 cents. Revenues totaling 6.84 billion, which is up 14%. So we look at production growth. Output reached 1.39 BOE a day at plus 19%. And we look at revenue trend. The revenue is around 27.6 billion, gross profit about 10 billion, and net margins 11.4%. Let's take a look at the profitability and efficiency of this company. Okay, so we look at the profit margin. Right now it stands at about 11%, which is about 36 to 64% gross. The revenue on equity assets, ROE, in layman's terms, is 7%. ROA is between 3 to 4.5%, which leads me into the free cash flow. All right, so cash flow yields about 10% with the dividend of payout ratio around 19%, dividend yield 2.1%, supported by a payout ratio of 34% earnings. Right now, I would tell you the bottom line with this company, Occidental Petroleum, is financially stable with improving leverage metrics, consistent earning beats, and robust cash flows. However, the stock's valuation reflects caution. Analysts see limited near-term upside. Continued debt reduction, cost discipline, and favorable commodity trends could make it a stronger value proposition. I hope this insight gave you a little bit more understanding of where this company stands as far as its financial upswings going into the next fiscal year. Thank you for your time.